Hey guys, starting a new channel here. The fun little name just to keep it loose. Idiot Investor. That's just for fun. I'm just going to show you guys kind of what I do. I use this Robinhood account just to mess around. It's not my primary account. I sold everything that I was messing with out of this account this morning, brought it down to an even $300 as if I was starting that way. And I'm just going to try and bring this account up slowly over time. And if you want to follow along, you'll kind of understand my thought process and what I do. This is not financial advice, so I'm not telling you to buy or sell any of these trades. You'd be totally at your own risk if you were to do anything in the market. But if you take a look, I'm starting with an even $300, and that's what we're going to play with. So I like to sell options, and I like to mess with dividends. Hold stocks for long-term swing trades if possible. It grows over time. But again, I'll just show you guys kind of my thought process, what I do, a little bit of how this platform works, and you can just follow along and see if it works out for me here. So let's get started. First of all, I'm going to go down to like my watch list here, there's a bunch of stuff on here for different reasons. Some of it I just like to see what the price looks like. I have no interest in ever buying them, but the one I'm going to be using today is going to be Workhorse. $300 kind of kicks us out of a lot of the options here right now. We don't have enough capital to even get into something like Riot or Mara. Mara here is Marathon Digital. It's a crypto mining company, if you don't know. But at $28, you would need $2,800 just to do a put. You would need that much capital. So we only have $300, so we're kind of limited in our options. But my favorite option around this price point would be Workhorse. I like to take a look at the 1 year and 5 year graphs here. If you look at Workhorse and you don't know anything about it, there was a lot of hype about a year and a half ago, and it was supposed to get this UPS or USPS contract that ended up falling through, but you can see all the hype up here for anyone that was in it at that time. And then when they didn't get it, you can see that it came right back down to earth, right where, actually it's a little bit higher still than it was back before the USPS contract. So taking a look at the 3-month chart here, where it went down, it doesn't seem to like to be below $3 a share. Every time it hits, it kind of bounces right back up right away. It's 301. So that's a good sign for us. That makes me feel comfortable at the $3 mark. There's a month chart here. You can see it's at $2.78. It goes up to 3, back down underneath $3, $2.88, and then it shoots right back up. So that makes me feel pretty comfortable as $3 being a resistance point. So let me explain really quickly the option strategy that I use to play this. I like to sell options, and that always leaves me with something at the end of the week or further out, depending on what expiration date you choose. If I were to buy an option, okay, so if I go down here to trade options, okay, you take a look at your weeks. These are your expiration dates at the top here. So we're going to take February 18th and just take a look at that. Okay, on the left-hand side at the top, you see buy and sell. Okay, if you were to click on buy, whether it's a call or a put, okay, you're hoping that the value goes in the direction that you want. If you buy a call, you want the price to go up so that the value of your contract goes up. If you buy a put, you want the value of the share to go down, and that's what gives you the value in your contract. However, at expiration, these things become worthless. If they're out of the money, was what they consider it. So if you were to buy this $3 put, for example, and it never got below $3, you're going to lose money. And then your contract is going to expire worthless, and you just lost whatever you invested. So when you sell options, you always end up getting your cash back or shares at the end. But you don't hit any home runs. It's just a bunch of base hits over and over. And I really like the strategy. So ever since I started using it, I never went back. So let's take a look if we were going to sell a put. So it's only Tuesday, but I started this channel today. Normally I make these plays on Monday. You don't have to. You can do it anytime you want. But the closer you get to the expiration date, the lower the value of the contracts are going to be, just by default, because time adds value. So if you look at the $3 on the left-hand side, those white numbers are the strike price. That's the price that the contract is centered around. So on the white $3 put number there, you're going to see on the right-hand side that it says 4 cents. That's what you get paid for that contract, for selling the contract. Okay, so I have put highlighted right now. Okay, now it's call, but I don't have shares. If you want to sell a call, you have to have 100 shares. If you want to sell a put, you have to have $300 in collateral to cover because what happens if it expires below $3 is that you would end up buying 100 shares for $3. Okay, so I'm pretty comfortable with that. So I'm going to be selling a put. Let me take a look at the price for February 25th, which is next week. And that's 10 cents, which is more than double the current price, which is pretty good. But we're just going to stick with this Friday, just as a learning tool, practice, see what happens. Again, this is not going to be an account that's going to blow up and be $1 million account overnight. This is going to be a slow, steady grind with a low risk investment and a small starting amount. So let's take a look. I'm going to sell this put. Okay, so the top, make sure that sell is highlighted, put is highlighted. I'm going to go down to $3 because I only have $300 in the account. I don't even have the option to do the $3.50 put because I don't have enough collateral. But it's also not in what's considered in the money right now. You see in the middle it says share price is $3.42. That means that if you were to sell this $3.50 put right now, and that price doesn't move the rest of the week and get above that $3.50 mark, you'd end up buying the shares for $3.50, which, is a riskier strategy that we're not going to follow right now. We're going to go below what the current share price is. If you're comfortable buying Workhorse for $3.42, you'd definitely be comfortable buying it for $3, I would assume. So I am. So I'm going to click on the right-hand side here. I'm going to do a short put. Sell Workhorse put for the expiration date of February 18th. Okay. It says I have $300 available, which that's going to cover the collateral for the $3 in case I have to buy 100 shares. Okay. So the 4 cents, by the way, is per share in the contract. Every contract is always 100 shares. So you would get $4. That's all we're getting for this. But let's take a look. We might not get $4, by the way, if no one buys it. So you'll see at the bottom, you're agreeing to buy 100 shares of Workhorse for $3 on or before February 18th. You do get $4 in credit immediately. So someone can exercise this early if they wanted to, but you just end up with shares, and it actually kind of benefits you. So let's send the order, and let's see what happens here. So taking a look, doesn't seem like it's going through. We might have to lower it to 3, which I might just do for the sake of practice here. All right. So no one's buying it. No one's biting right now. You could wait longer as the price fluctuates more to the downside. It would be more likely to sell. Let's take a look at the top here. So let's just replace the order. We're just going to do it for practice. We're going to go down to 0.03. Send it. and you'll see that the put has sold. Okay. So now it looks like it's sold. All right, a little hiccup there, storage space issue. But you guys can see now that the workhorse put sold for 3 cents, which is the current valuation of it. It'll fluctuate over time, go up and go down. It'll reflect in your account. Looks like Robinhood took about 2 cents off the top there from me, but that's not a big deal. We still got $2.98. That $2.98 is paid to us now. That's ours. We still have another $300 that Robinhood has taken to use as collateral for the options contract in case we have to buy the shares for $3 a piece. But the valuation of your account at the top there where it says $299.98, it's because it includes the cost here of workhorse puts to buy out of that contract, which we're not going to do. So you'll see that at the end of the week, probably Saturday or Monday, that this will reflect whatever ends up happening. So we're either going to end up with 100 shares of workhorse purchased at $3 a share, or we're going to end up with $300 in the account plus the other $2.98 for a grand total of $302.98. Okay, so thanks for watching. And if you have any other questions about specific things you guys would like to see, then go ahead and ask me. And in the meantime, I'll continue to just chug along on this account and we'll see where it goes. All right, thanks guys.